Hi everybody, we're back here today. We're still talking about what to do to get your house ready to sell and get yourself ready to sell. That's why we brought Todd Huff in. Todd's going to tell us a little bit about what you need to do as a seller to get yourself ready to buy.
I'm Todd Huff with Prosperity Home Mortgage, and the biggest single piece of advice I'd give you is it's never too early to take a look at the home financing. As you're a seller and you're thinking about listing your home, get some answers early on about what the payment on the new house might look like, how the down payment would come, even the proceeds from the sale of the house, how that'll apply into your future loans. So always look at it early. Give us a call. We'd be happy to chat with you about all those scenarios, whether you have to sell your house before you buy the new one, or if there's ways to overlap a little bit while you move out of your house and into your new home.
Hey Todd, a couple of weeks ago, and I know you hadn't rolled it out, you mentioned something about a bridge loan. How does that work?
That's one of those options. So on a bridge loan, if you've got substantial equity in your home and you want to use that as the down payment for your new home, then we can offer up a bridge loan scenario where we put a loan on your current home, just temporary for a few months until you've sold that home, but you can use the equity in that home as a down payment into your new home. So it's just one of those many solutions we've got to help you transition from your current home to your new home.
That's a great option.
That is interesting.
Yeah, and Todd, you know, this doesn't come up too often, but what about assumable mortgages? Like if they're trying to buy a house and it's got an assumable mortgage, say we do the bridge loan, access their equity, how does that assumable mortgage typically work?
It's a great thing to look at. So on an assumable mortgage, it's a loan that's currently in existence with the home that you're looking at. It's likely a very low rate or a lower rate than where rates are right now. So you can assume that mortgage. It'll become your mortgage once you buy the home, but you can assume the interest rate and the terms and the agreements on that existing loan. The biggest challenge really is coming up with the down payment, because that loan's likely going to be at an amount that's less than what the current purchase price is. But you could use a bridge loan solution, kind of couple the two together and say, we'll take the assumable loan on the current home, couple that with a bridge loan, that's your down payment, and that would be a great combination for a new homeowner.
That's great info. Todd, I appreciate your time. If you want to reach out to us, we'll get you in touch with Todd and he can give you a lot of options. Y'all have a great day.